Welcome everybody to this week's Q&A and fresh topic on tax and legal strategies. My name is Mark Kohler. Please don't scroll anywhere for just a moment. Let me just let you know the topic. If you've got a side hustle, a side gig, a full-time small business you've been working for years, sometimes you have general tax and legal questions and it's hard to get a straight answer or time with your professional. I'm a senior partner in a law firm and accounting firm with an amazing team, but we're busy and we have appointments every day. But once a week, I come on Facebook Live for Entrepreneur Magazine, my personal Facebook, and YouTube to just answer some questions and hopefully point you in the right direction. I'm a firm believer in the life of an entrepreneur and that American dream. So I'm here with you for the next 45 minutes, just answering questions and hopefully helping you out in finding your plan to make more money, save taxes, build it, and protect it. That's what I'm talking about. And I help clients with selling their businesses, buying new businesses, investing their IRA, their 401k, using LLCs, S corps, trusts, your estate plan, wills. We're lovers, not fighters. You didn't hear anywhere in there, go to court and fight a lawsuit. I love watching the John Grisham movies, but I'm not a fighter. I get too emotional. I'm not good at it. I'd rather just make you money and make us money and save money with the IRS. So our topic today first, and then we're going to go into some general Q&A. Now, if you're catching this on Instagram, YouTube, or Facebook, please type your question down below. I need to know your first name and the city you're from. That's all I ask. I'm not going to read off handle, ABCD, loves bananas. Nowhere in the world we know where you're at. Just give me your first name and your city, and I appreciate it, and should be a lot of fun. Right here, I'm going to start seeing a lot of these questions come up on my screens, and want to say thanks to my crew in here, Corey and Allison, that are helping bring this together. All right, there are 3 reasons for an LLC. This is easy, 3 reasons. You're going to love this. Number 1, and let's go to the whiteboard. Are we on the whiteboard, Corey? Okay, on the whiteboard, the first reason, which is the most common, believe it or not, is the most common for an LLC, is I'm going to hold investment property. That's number 1. So on my left side, right side, many of you have seen my little diagram here. So if we put operations over here, and we're going to consider your day job part of this. So day job is here, you and or your spouse, and you may have a day job or a full-time small business. Over here would be your small business. And then over here would be your W-2 day job. And over here, we're going to use, this could be your LLC for a rental property. That, my friends, is the number 1 reason for an LLC. I want my trust to own it. So this is kind of my operations and asset side. I'm known for my trifecta. I just love it. And this one is where I'm trying to figure out, where do I put my assets? They're going to go on this side. And this is where I'm putting property and money. I'm building up my wealth. And over here, right here, are my rental properties. And that's where an LLC is used first and foremost. Number 2, I might use an LLC for my little sole proprietor business. Not sure if it's ready for an S corp yet, but I want to put an LLC around it for protection, so that if anything happens to me, much like your rental property, you're protected if anything goes wrong on your rental property. And so you're over here, and I'm going to run my little small business in an LLC. Now, do LLCs save taxes? No, they do not. That's a wake-up call. I hope that some of you caught that. LLCs do not save taxes. I do not need an LLC to write off my car, my home office, my cell phone, any of that. Nope. LLCs are for protection. Now I can convert this LLC to an S corp when I want to. And that's what I like about an LLC for your small business, is if you start making too much money, I can retroactively turn it into an S corp, even back to the beginning of 2020 right now, just for a short more period of time. So I want to use an LLC for protection and the flexibility to turn it into an S corp retroactively, more than 75 days. Some of you accountants are out there like, well, you can't make an S election back further than 75 days. Yes, you can, with the right IRS rev rule listed at the top of your 2553. We've been doing it for 20 years. So LLCs work well there. So number one is to hold assets. Number two is to have a small business for protection and convert to an S Corp. The third reason that is the most common is a partnership. So let's say that Allison in the room here with me, we're going to partner up and start selling jeans on eBay. So we're going to sell product on eBay. I might be having a storefront. I could run a landscaping business. I could do fix and flip real estate, but it's short-term deals. It's short-term business. It's operational. Now, in the long run, I know I need an S corporation to save taxes. LLC is not going to save me. I do not want an S corp with Allison. So what we do is my S corp owns 50% and her S corp owns 50%. So now my S corp becomes a partner with her. And you're going to see LLCs out there all the time. LLCs for a restaurant, LLCs for a law firm, LLCs for a dental group, for a doctor's group, blah, blah, blah. All these people are LLCs in the main business, and this is where employees could be hired, but the actual owners usually filter, they launder their money. Did I say launder? I meant filter your money through an S corporation. So S and S. That's the third main reason for an LLC is for a partnership. Now, I'm going to throw out a fourth here on the fly because we just held another podcast today, and it was huge, on cryptocurrency. We have clients buying Bitcoin and Ethereum and others, virtual currencies, and they're using an LLC to do it. So you can take your IRAs, your Roths, your 401ks, and create an LLC with one Roth, one IRA, whatever, and I can create an LLC that can own Bitcoin. I wanted to say own and Bitcoin at the same time. So Bitcoin or any sort of cryptocurrency. Now these LLCs can own real estate, they can own investments, they can run businesses, all sorts of good things. This is called self-directing. This is my pre-tax or tax-free bucket. Now look at this. Isn't this kind of fun? You've got your bucket for real estate in your own name, your bucket for investments in your retirement account, and your bucket you might have with a partnership, and your bucket for your own personal income and small business. These are the four reasons, and I'll switch to even a color here. Let's do it with a little bit of color to make it a little more easy to see. Number one, right here with an LLC for holding. Number two, an LLC to run my business. Number three, an LLC with a partner. An LLC to hold investments with my IRA or 401k. Now, I guess if Allison called me up and said, I want a LLC, we want to buy a rental property together. It's not an operational business, it's a rental property together. So we could have that same LLC as a partnership LLC, but we would own rentals in the partnership LLC 50-50. We wouldn't run our business in it. So I guess I could call that number 5. So 5 reasons for an LLC. Boom, there you go. Now I'm all yours. We're going to do Q&A. We're going to rock it and see what's going on and have some fun. All right, now I'm going to put my glasses on. I'm embarrassed here, even though I've got this long flowing hair and many people think I'm a millennial. That's obviously a joke. Okay, I'm just going to rotate. I'm going to look at Entrepreneur Facebook, YouTube, and then my personal Facebook, and we're just going to rock and roll here. Let's see. Howard says, what should I set up for a handyman business? Great question. Everybody, remember, we go back to our trifecta. If you're doing a little handyman business on the side, I think you've got liability exposure, Howard. Anybody out there, if you're selling a product, a service, you're doing some catering, you've got a little landscaping business, you're doing a food truck, you may not make a ton of money at it, but if someone got hurt when you were out on a job, think of that, Howard. You're doing a handyman project and the floor's wet, there's some grease, some oil, a ladder, and someone comes by and trips and falls. You want protection. So most side hustles, I want you to run them in a little LLC. That's a great little fit. And get your bank account, get your EIN going. We set up LLCs in all 50 states in the country for $500. Now, by the way, I should back up. The average is $500. It's $400 plus your filing fee. So it could be a little less than $500, a little more. You work with a paralegal, it's done. So it could be very, very affordable. If you want an hour with a tax attorney on the phone with you, planning your big picture, you get a whole hour. You can talk about the Super Bowl or whatever you want. We charge $800. So you can get a real attorney focused on you as a client of a real law firm. No online weird service. So it can be very affordable, Howard. This is not an infomercial, but I want all of you to know that it doesn't have to be overwhelming. So any sort of small side hustle, side gig, I would go with an LLC. You could start with a sole proprietorship, no LLC or no corp, see how it goes, and then jump into that LLC. Ali, I'll come to you on Instagram as well. Okay, now let's jump over here to Kevin in New York City. Kevin said, oh my gosh, and I scrolled down. I shouldn't have seen. I see Ernie says, hi, Mark. Vigato, John in Dallas. Hey, Kevin in Long Beach. So I apologize. I'll get back up to you. But this is Kevin in New York. I'll be earning $300,000 in qualified dividends this year. Should I create an LLC for this distribution? Nah, I wouldn't. I wouldn't do it. Now, here's an important point. Kevin in New York says qualified dividends. What does that mean? He's not running a business. He's investing and he's getting dividends. So is that really a business? No, it is not. It's an asset creating passive income. That's great, Kevin. I just got chills, by the way. I love doing this. Thanks everybody for being here. You can hang out with me and eat some popcorn and get some French fries and a drink and come back and watch this later too if you need to. Sorry, I just wanted to say that. I'm having a great time. Kevin, now what does Kevin maybe need an LLC for? Asset protection. Now think about that. So over here, Kevin's got $1 million. $1 million. And he's like, do I need an LLC? For tax purposes? Nope. It's all Schedule D, passive income, dividends, passive, Schedule D on your 1040, D as in David. But Kevin's living large, chasing fast women and driving fast cars, and we don't want Kevin to get in a lawsuit. We could set up an LLC in the right state to hold his $1 million. Now we could have some privacy and some protection. Would I set up that LLC in New York? Maybe, maybe not. We might do a number of different strategies. And I'm not saying Delaware and Nevada. I've got books and my chapters on asset protection. So Kevin, I like that for asset protection, but not for taxes. Okay, let's jump over here to my personal Facebook. Yorley says, hey, I've got Helen in Houston, Yvette, Olaf from Maggie in Atlanta, Yvette in Illinois. You guys are awesome. Thank you so much. Ricardo says, how are DTI ratios calculated when selling and buying? Is your current DTI used? Do you have to support both mortgages or are mortgages completely ignored? Ricardo, give me a little definition of what you're talking about with DTI. I know that's an acronym I deal with a lot of acronyms every day. So come back to that one, Ricardo. Give me a little more on that. I apologize. You're like, Mark, you don't know what a DTI is? Well, I was thinking of all sorts of indexes as possible. Matt says, as a real estate agent, should I be an LLC or move to an S Corp? I own rentals and interests in other ownerships in businesses. Okay, this is great, everybody. Now, let's keep the same diagram up here on the whiteboard. Matt says, I'm a real estate agent. So everybody, this is what our tax attorneys go through on the phone with you. They go, okay, Matt's a real estate agent. Is that short-term or long-term income? Is that an asset that he's held and sold over after 12 months? Mm-mm. He is operating as a realtor. Now, he might have a W-2 and wait tables at night. He might have a W-2 and be a stockbroker on the weekends. But he's a real estate agent for his business. Now, this is important. Let's digress. Everybody out there, listen. No matter what type of business you are, landscaper, dentist, doctor, realtor, engineer, food truck, whatever, that's operational business. Now, this is important. I could be a sole proprietor or an LLC. Now, that could be Matt. He's just a brand new LLC or sole proprietor. Or he's saying, should I be an S Corp? Now, let's compare the two, apples to apples. Let's say Matt brings in $100,000. He spends $25,000 on expenses, cell phone, travel, dining, home office, electronics, everything under the sun. And he has net income of $75,000. Okay, everybody? Pretty straightforward. $100,000 of gross sales, 25 grand in expenses, and he nets 75. Cool. Same in an S Corp. Let's say we could recreate Matt's life in a vacuum and go, he made the same 75 grand net in an S Corp, or he did it in an LLC or sole prop. Now let's talk taxes. The first tax over here, self-employment tax, 15.3%. That's FICA, the F word, FICA. Matt, you want to say, what the FICA? I got to pay that? That's right. That's 10 grand. Then if Matt is in a state with state tax, he's got Fed and state tax. Oh my gosh. Now if he could be like 25% with state and Fed plus another 15, he could lose 40% of his income to taxes right out the gate. Now, if Matt was an S Corp, we take that same 75 grand, and a lot of times under 100 grand, we're going to do a 40-60 split. I'm going to push 40% out as wages and 60% out. Sorry, let's do percentages here. I'm going to push out 40% as wages and 60% as K1 or pass-through. Now, I know some of you that are accountants right now and attorneys are going, oh my gosh, that's totally aggressive. I would never do that. You've got to do reasonable compensation. And guys, I go to every reasonable comp seminar every year. I read every case on reasonable comp. I've had IRS agents on my ex-IRS agents, because current employed agents won't come on my podcast. And we've talked about this for 20 years. I have never had a client audited for taking too low of a salary. Now, everybody's a little different. I'm just saying this is a benchmark. But you can be cautiously aggressive. And everybody out there, if you use my accounting firm and we pay your salary and you get audited, we pay the penalty. And that's what every accountant should do with their malpractice insurance. So back to the example. I net 75. Now this is important, everybody. I'm a realtor. I made 75 grand after all my expenses. I either take it in the shorts and pay almost 40% in taxes, or I say, well, I'm going to take 25 grand in salary and 50 grand in net income. Do you have to wait around for a paycheck, Matt? Nope. We can do quarterly payroll reports. We can make it easy schmeezy. Now look at, I just saved 15% on 50 grand. Approximately, there's some math here, a little bit here and there, but approximately 15% on 50 grand. I just saved $7,500. Now I know you in California are like, an LLC or an S Corp is $800 a year. Let me see, spend $800, save $7,500. I think the math is in your favor. So the big question is, when should Matt convert from an LLC to an S Corp? For everybody out there, whether you're a dentist, doctor, engineer, landscaper, or plumber, I want you to convert to an S Corp when you're going to net around 40 grand. If you're going to net 40, then I could do a 50-50 split. I could do 20 grand in K1 and 20 grand in W2, and I just saved you 15% on 20 grand. That's 3,000. Doing an S Corp to save 3,000 is about break even to worth it in my book. So, in summary, everybody, and I may have answered a number of questions for some of you watching already. When I have a new client that's just getting going, here's their trust at the bottom. We split it into short-term and long-term, and we start out as a sole proprietor, and we convert to the S Corp when the time is right. And you may start out as sole proprietor or LLC and convert to an S Corp. That's cool. We can do it retroactively to the beginning of the year if you're an LLC. But over here is where we put our LLC for rentals. So if you saw that, Matt said, I've got rentals too. Whoa, Matt, your rentals go over here. Your operations go over here. So this is your 1099 from commissions, and this is your rent from your rental. Now, I don't want all of you to feel like Matt got special treatment here, taking a lot of time on his question, but this question, I can see it everywhere. How do I use the S Corp? Where do I put my rentals? So Matt, get out there and kill it. My daughter Sydney is a realtor. She has an LLC. I have not taxed as an S Corp yet. Hopefully this year's the year. If my daughter Sydney buys some raw land or some real estate and some rentals, we'll set up a separate LLC for that. Brother, sister. Boom. Okay, Ali, did you have a question on Instagram?
Yes. How is the profit from crypto taxed, like income or capital gains?
Woo! What's their handle?
Loans and Listings, LILI.
Okay, Loans and Listings ask about cryptocurrency and how it's taxed. Now, believe it or not, I just crumpled it up and threw it over there. This is what a nerd I am. I was reading the IRS notice from 2014-21. Yes, that's still in my brain. I'm an idiot. Sorry, I'm a nerd. And I was reading the IRS publication, or I should say notice, on cryptocurrency just today. Here's how this works, everybody. I'm going to do two options, A and B, and then we're going to break it into A1 and A2, and B1 and B2. All right. Okay, everybody, this is cool. Now, let's say you were so freaking lucky enough, like 8 years ago, to buy cryptocurrency Bitcoin at 40 cents. Now it's worth $30,000 freaking dollars a coin. What? Now, just in the last 8 months to 12 months, it's gone from $3,000 a coin to $30,000 a coin. Tenfold increase, right? Okay. If I'm going to call her Susie. I think this was, I'm going to go with a female name. It sounds like it was female in gender. So Susie says, Mark, I bought cryptocurrency and I bought it for $1,000. I bought Bitcoin for $1,000. That is your basis. Whenever I'm going to put PP, that's your purchase price. So if any of you go out there and buy Bitcoin, now I did a whole podcast today on how you do it. You got to set up an account with a wallet. Coinbase is probably the largest. You set up your wallet, you put money in, and then you go buy your Bitcoin, Ethereum, whatever you're going to buy, and then it sits there. If you go out and sell that Bitcoin for $2,000, you have a capital gain. So you have your purchase price and your sales price, capital gain. If you held it less than 12 months, it's short-term capital gain. If you held it greater than 12 months, it's long-term capital gain. Now, I won't go into the differences there and how it's taxed, but that's your first option. Now, let's say Susie goes, well, I'm not going to sell it for cash. I'm going to go hire someone, because people are now taking cryptocurrency as payment. And they go, I'm going to go hire someone to decorate my house, and they're going to charge me $2,000 in cryptocurrency. Okay, but your coin is now worth $2,000, but you don't turn it into dollars. You literally transfer your $1,000 of Bitcoin, your 1,000 Bitcoin dollars or whatever, virtual currency, and pay someone fair market value $2,000. So see the difference here? The currency was actually worth $2,000 when you paid someone. Is that a gain for Susie? Yes. Susie must pay tax because she traded it not for dollars, but for services that were worth $2,000. She has a gain. Now, we could go on and on with Q&A on option one, where you buy Bitcoin, you resell it, you buy Bitcoin, you use it for services. Bleh. If it goes down in value, you get a loss on your tax return. If it goes up and you sell it, you have a gain. So you could sell it at a loss or use it's just like stock. Think of it like stock. Okay. Option two, Susie does mining. Ooh. Now, some of you know what mining is, but you set up a computer system that helps verify blockchain algorithms, and you get compensated in Bitcoin or Ethereum or whatever the virtual currency is. It's a complex topic. You can read up on it. It's a very nerdy topic, but fascinating. When you do mining, you're essentially earning virtual currency. That is ordinary income, and it is subject to self-employment tax. It is literally, think of it, you're out there mining to find gold, and when you get done with the project, you're getting compensated. And I'm just dumbing this down. I know some of you know far more about mining than me, but in the eyes of the IRS and accountants, if you receive virtual currency for mining, that is ordinary income and is subject to SE tax. Okay. I'm sorry, everybody. I know some of you are going crazy. I'll go fast. This is so fascinating. Option B, you do this whole thing in your IRA or your Roth. So you can do IRA or Roth no tax when you buy and sell your cryptocurrency. When you take it out of your traditional IRA, you pay tax. When you take it out of your Roth, no tax. I'm just dumbing this down, keeping it simple. And if you do the mining inside a retirement account, you have what's called UBIT, and we usually put a C Corp blocker in there, and then we protect you and you only pay 21% in taxes. Okay, now this whole topic is a chapter in my partner's book. We have a podcast on it. Let me tell you guys where to go. Go to sdirahandbook.com if you want to get the book on that. There's a whole chapter on cryptocurrency, and there's an article in the blog on crypto. And also, if you get over to our podcast called Directed IRA Podcast. All right. Okay. We're going to get back to it now. Thanks, everybody. But I'm here for you. I'm loving this. I hope you guys are having a good time. All right. I'm going to go back to, oh my gosh, there's so many questions here. Tori was replying to Howard saying it depends on your needs. An S corporation isn't a business entity like an LLC. It's an elected tax status. S corporators may pay less in taxes and pay themselves a reasonable salary. I love what you're saying, Tori. You're good. Howard says S corp. Okay, now hold it. Tori chimed in on Howard's comment on an S corp could be the way to go, but start out as an LLC, and then when your income gets to a certain level, you would normally convert to an S corp, Howard. So just keep going. I need to talk to someone, ordered business cards. If any of you need a consult, our law firm can do a consult with you with any of my attorneys, 888-801-0010. Now, I'll tell you, everybody, if you're on a tight budget and you're just getting started, start with an LLC in your business. Then study. Come to my podcast every week and listen. Come to my Facebook Lives, YouTube Lives. Get my book, Tax and Legal Playbook. Study up. So, Howard, there's no major rush, but start with an LLC and you can always convert it to an S Corp later. Josh says LLC and S Corp it. True, but you got to wait for the right time, Josh. Herb says from Delaware, if I set up a revocable living trust, do the LLCs I have for real estate business need to be switched to the trust as an owner? Yes. Herb, great question. So everybody, remember the trifecta. So here's your trifecta. Your revocable living trust is the foundation. Your trust owns the LLC that owns your rental. Your trust owns your home. Your trust owns your LLC that may be turned into an S Corp. Your trust is the beneficiary of your IRA. So everything flows down. So Herb, when you set up your trust at our office, we have a paralegal, Brady, who does all of your company transfers to your trust. That's what we do. So Herb, you're on it. Okay, I'm going over to YouTube, and I promised some people, hey, Luna, aloha in Hawaii. I'm getting over there next month, by the way. Okay, Vegetto says, Mark, are S Corp owner employees eligible for the employment retention tax credit? There are conflicting CPA opinions on this. Self-employed or not, but some state CPA says owner plus spouse are eligible. Vegetto, let me say this. With the first round of PPP, they were not. I am trying to write an article on this. Allison in here has been bugging me for a week at night times to just quit relaxing and write another article on this. Vegetto, stay tuned. I am not going to confirm nor deny that you as an owner of an S Corp can do the retention tax credit and the PPP. I know you can do the RTC for your third-party employees, but can you do it for yourself? And that's really what you're asking. So yes, for third-party employees. For you, the owner, I'm going to put a big question mark. I'm trying to get there, Vegetto. It's been a crazy 2 weeks since they passed that law. Okay, I'm going to jump over to my Facebook. Okay, Ricardo, DTI ratios, John Miller. Can an LLC hold physical gold, land, etc.? Absolutely, John. Absolutely. So I have many clients that own brokerage accounts, collector cars, that's an ugly car. Collectibles, gold, silver, all those things can be owned by an LLC for asset protection. I'm not going to get into how at the moment, but yes, and with rentals, it's the easiest. I just deed the property over to the LLC and do not worry about the due on sale clause, people. One other from Jersey. Jessica says, do I still issue a 1099 to my contractor even if using a hard money lender? Okay, Jessica, I'm a little confused, but that's okay. It's my fault, not yours. We're trying to do this quick. Jessica says she has a business. Now, I don't know if she's an operational business or rental property business. This is long term, and this is passive. This is ops. And she goes, now let's break down Jessica's question from New Jersey into two parts. She goes, do I still issue a 1099 to my contractor? Well, any of you out there that paid anybody more than $600 in 2020, there's a new 1099 called the 1099 NEC, non-employee compensation. They are all due to be mailed to your vendors by January 31st. That is the deadline this year. Oh, or is it February 2nd? Allie, isn't it February 2nd? Can you grab my, here, I got it. I want to pull this out because I think January 31st is on a weekend, so I just want to be very, very detailed on this. Yeah, it's February 1st. So it's February 1st this year because the 31st is on a Sunday. So February 1st, everybody, you have to issue your 1099 NECs to all your people that you paid, and you have to send them to the IRS with the transmittal form 1096. That has to be done before February 1st, everybody. So do not forget. Very, very important. And oh my gosh, I think my laptop crashed and is out of juice. Corey, can you hook up my laptop? I thought I had plenty of juice when I sat down here. I am sorry, everybody. Okay. Allie, can you give me another question from Instagram? And, oh, the second part, before you go there, Allie, on New Jersey. You got to issue 1099s before the end of the year. And then she said, even if I'm using a hard money lender. So I don't know what that means. If you're using a hard money lender that you're paying interest to, you want to get a W-9 from them. And there's a different rule. That's a 1099 miss, M-I-C, M-I-S-C. So I think what you're asking me is, do I need to give a 1099 to someone I paid interest to? Pulled out the instructions on the 1099 miss, and that's a different deadline and procedure than the 1099 NEC. Okay, now let's getting over here to Instagram.
Maria 12 asked, I created an LLC as a side hustle flipping houses, but it turned out to yield $100K net in 2020. Am I going to get killed with taxes? I'm in California. Should I turn into an S corp?
Okay, what type of deal did she do?
She started flipping houses.
And she did one.
She said it turned out to yield $100K.
Okay, what's her first name?
Maria 12.
Okay, Maria 12 in California says, I fixed and flipped a property in 2020 and it made $100,000. First of all, Maria, congratulations. That's wonderful. Now let's think about this. When Maria bought this fix and flip, she may have thought, oh, I'll put it in an LLC for a rental down the road. Okay. She may have also just said, if she's doing a fix and flip, she probably had a day job or she's got a spouse that helped pay the bills while she went through this. She now made $100,000 profit. That's what we're going to assume. She says, am I going to get killed on taxes? And should I do an S corp? Whew. Okay, first, you cannot go back in time and backdate into an S corp. And number two, if all you did was one fix and flip, that's going to be short-term capital gain. I'm not going to require you to get an S corp. And if you only did one fix and flip, you're not in the business of fixing and flipping properties. So I would also say you're not subject to self-employment tax. Now, I don't know all of Maria, your entire situation. Are you a realtor, a broker? Did you fix and flip other properties? I'm just assuming you had a day job and fix and flip one property. In that situation, you're not going to have self-employment tax. You can't go back and backdate an S Corp. Now you're asking, are you going to get killed on taxes? Well, you're going to at least pay 8% or more in California, I would think. And you're going to have federal tax on that. I don't know what your other income is, so I don't know what your marginal tax rate is. But I would bet, just off the cuff, you're going to probably pay at least 25% in taxes on that. I'm just saying, I would at least budget 25 grand. So if you made 100, set aside 25 grand right now, and then hope and pray you can dig up enough write-offs. And again, I don't know your whole world on that situation. Okay, everybody, thanks. I'm going to just do some rapid fire here. What is an LLC in South Africa? Rafiq, I do not know. And we have an international attorney in our office. Her name is Christy Parker. You might want to reach out to her. If you're doing business in South Africa, you're going to want to get a representative in South Africa, and there can be different names for a lawyer in other countries. So check that out. Robbie in Orlando, shout out. Tori in New Jersey. Should I form an additional or different business structure for tax purposes and operational efficiency? I operate two slightly different businesses under a common single owner LLC and financial structure. One is manufacturer, Oh my gosh, Tori, you're writing a big book here. I love you. Both businesses have grown substantially in the last 2 years. They're currently under the LLC, blah, blah, blah. Okay, everybody, this is a great question, Tori, and I'm just going to drill it down to this. I hope you guys are doing okay. Send me some love if you're okay. And if you're mad, don't say anything. Okay. Everybody, thank you. Okay. Tori in New Jersey says she has 2 different businesses going into one LLC. Tori, I'm not opposed to that. Everybody out there, guess what? Mark Kohler, I have one S Corp in my life. Mark J Kohler, Inc. Now, based on Tori's income, I'm probably going to turn that into an S Corp. It sounds like she's got some success. So can she run 2 different businesses into one LLC? Absolutely. For tax purposes, I love it. She's got one W-2, she's got her K-1 and draws, and she's rocking. I would do that. But she's got 2 different businesses. She might have 2 different sets of employees. She might have plans to sell one business. One business might be high risk. The other one has a lot of value. Some of you may say, Mark, I'm surprised. If I were you, I wouldn't put 2 businesses into one entity. Well, I don't know all the facts to Tori's situation, but we ultimately might set up 2 LLCs as subsidiaries. And those 2 different businesses flow 100% into her S Corp. And that's very common. My Mark Kohler Inc. owns a law firm, an accounting firm, and this and that. I don't want to, but I have one S Corp, Tori, and I would funnel everything into it, get a tax consultation, and then you got to look separately at asset protection and decide if you want subsidiaries for these operations. Okay, I'm going to jump around a little bit. You guys are wonderful. Thanks for asking such great questions. Blah, blah, blah. I'm going to jump over to... Hi, Mark. The owner employee cannot get both PPP and RTC. So that's Lily. She's thrown in. The IRS has not changed their stance on that. Thanks, Lily. I'm going to trust you on that. If I had to be careful, I would say the owner employee cannot get the RTC. That was not allowed the first time. Because they want to report the income. Okay. What if I give a 1099 NEC to a contractor and they don't file it or don't want to? LOL. That's their problem. So Lily, I like your comment too. A lot of people don't like to do that. Beautiful Chaos. Jennifer in Pennsylvania. I will be registering my business soon. I'm a notary signing agent. Can I write off things I purchased for my business last year? Yes. Now, everybody, Jennifer's got a great question over in Pennsylvania. Whew. Take a breath. Boy, is this fast? Let's everybody take a breath for a quick second. I just know this can be like drinking from a fire hose. If any of you, like Jennifer, started a business last year, but you didn't make any money last year and you made money this year in 2021, what do? Let's look at a timeline. So let's say here, right in the middle, we have 2020 and a new year, January 1st, 2021. Now let's look at a couple options. Let's say that Jennifer and any of you out there incurred some expenses. Let's call this option 1. You had expenses but no income. Expenses, but no income. What do you do? Can Jennifer write these off in 2021? Yes. We would put these in a bucket and call them a startup cost. A startup cost can be carried into 2021, and the first 5,000 can get written off just like that. The rest have to be amortized. So, Jennifer, you keep track of all those expenses you incurred last year, and you freaking give them to your accountant in 2021 when you make money. So you start revenue here. Now you say, well, Mark, I was in business. Not unless you had income. If you're setting up a lemonade stand and didn't sell any lemonade, you're not in business. Now let's say option 2, Jennifer says, ooh, I had expenses last year, but I also had income last year. Well, if you had expenses and income, then you're good, girl. You write it all off in 2020. You don't need to carry forward the startup cost because you didn't have any startup costs to carry forward. You were all in business in 2020. So you're going to write them off in 2020. That's the startup cost rule. Let's jump over to my Facebook. Richard in Arizona says, love working with you and your team. I appreciate having you as my tax and legal instructor in my training program. Richard, thank you so much. You're so kind. LLC for marketing company. Josh, again, everybody out there, no matter what type of ordinary income business you have, when in doubt, start with an LLC and you're going to convert to an S Corp right away or wait until you have enough net income to make sense of it. Yvette says, does each individual need to be put in separate LLCs? Well, Yvette says, I'm a realtor and we'll start wholesaling next month. I'm not holding any of these properties. Okay, so Yvette is doing wholesaling, which means she's not taking title to property. She's making arrangements in a contract to take property contracts and wholesale them. So Yvette was going to start out in an LLC or an S Corp, and she is going to be wholesaling. You're not going to set up multiple baby LLCs. No way. You've just got all these little contracts you're wholesaling. You're good. Now let's say Yvette's buying rental properties. Okay, we start out with one parent LLC, and then she starts buying property 1, property 2, property 3. At some point, I'm going to go, let's set up another LLC. We don't want too many eggs in one basket. So we can start peeling off properties and create different buckets. But I'm not the type to set up a new LLC for every rental, unless they're $500,000 rentals or there's a lot of equity or there's other partners. And then I have to set up another LLC. So everybody, don't think I'm crazy and I just set up a new LLC every time the sun comes up. That's not my style. Ricardo says, how would you set up a media services, real estate photography YouTube channel business that will eventually hire employees? I want to use this media company to help me with real estate investing. Well, right here, I'm going to stick with this one. Ricardo, you're going to set up your media business and go straight into an LLC. And you're going to start making money. As soon as you net, how much? How much until you make a conversion to an S Corp? When you start netting $40,000 or more, I want you to convert to an S Corp. Now, is he going to use this to hold his rentals? No. Ricardo's going to take his profit, bring it over here, and fund a different LLC to buy his rentals. So see that? Profit draws become contributions over here. And you're going to set up a different EIN, another QuickBooks account, and this is going to have a different set of books for your rentals, but you're going to pull the profit out of your media business to do it. Okay, Instagram, what do you got, Allie?
So we've had a couple questions about trusts. We had one from John Wesley Harrison, and he asked, what are annual costs to maintain a trust? And then we got one from Andy Padilla, and he said cost to set up a trust.
Okay. So everybody, a trust is really part of an estate plan. Now, some of you may be like, well, Mark, I thought this was about LLCs. But who's going to own your LLC? What happens if something happens to you? Does it go to your spouse, your kids? Are you single? Are you married? Are you old? Are you young? It depends. So if we do the trifecta, the trust owns your LLC, that owns your rentals, and your trust owns your business, that is our trifecta. S Corp, LLC, trust. Now we're going to build on that, and everybody's a little different. But the estate plan includes a revocable living trust, a will, powers of attorney for finances, and powers of attorney for health care. It's also going to include funeral and burial instructions. It's going to include donate organs, where's all my stuff, blah, 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 blah. This is an estate plan. An estate plan with all these pieces and parts is going to be at least, with a reasonable law firm, $1,000, maybe $800. I've seen clients spend $3,000 or $5,000. We charge $1,500, married or single, any state. And these documents I have hand-tuned with my team of lawyers over 20 years. This is a freaking awesome estate plan. I have clients worth $20 million that do an AB trust estate plan, done. You could be worth $5 and you need an estate plan. Now, this is what an estate plan is. Shop around. You can work with our firm if you want. That's cool. But the estate plan is your foundation. And once you have kids, real estate, you're married, you have any money at all, you really need an estate plan. Now, what does the trust do? The trust owns your LLC. The trust owns your home. And guess what? There's no annual cost. Oh my gosh. No annual cost, no tax return, no fee to us, you're clean. Now, anywhere in that, did I mention asset protection? I did not. The trust is for estate planning. Now, some of you may say, well, don't I need an irrevocable trust and a protected trust and a spendthrift trust and all these other types of trusts that are for asset protection? Adapt. Oh, you bet. We set those types of trusts up, but they always all feed back into your main revocable living trust. So these are not for asset protection, but every client has one. You can amend it every 5 or 10 years for a few $100. Don't overdo it. Okay, I'm going to jump back over here to Entrepreneur, and let's see what we got. Nicole, do you need LLC for online business store? Nicole, you do not need an LLC for an online business store for asset protection. You're selling jeans on eBay in the middle of the night in your underwear. You're not going to get sued probably, right? You're okay. But when you start making $30,000 or $40,000 or more net, you want to convert over to an S Corp. So Nicole, that's where the LLC starts to play in. Alicia from Pennsylvania, can I set my child up with a self-directed IRA and put real estate inside it? At any point, can the real estate be removed from it? Kinda. All right, so let's do this. So let's do our trifecta. So Alicia, Asaya, I'm sorry. I'm going to call her Hall, and it could be a male or female. It's a very unique first name, so forgive me. So here's your trust, and here's your LLC with rentals, and then you got a day job or you've got a small business, and you pay your kids earned income. No kiddie tax. You literally pay your kids, whether it's a payment under age 18 called outside labor, no W-2 required. I have a whole chapter of this in my book. You pay your older kids, whatever. Your kids have to have income first. The kids can form a Roth IRA. The Roth IRA can be a partner in an LLC with you, with your 401k, your HSA, your traditional IRA, your SEP, whatever. Then you can go buy real estate. Can your kid have a Roth and own their own LLC 100%? Yes. So, Asaya, this is right up our area. We love this. And so I would recommend any of you that want to self-direct your kids' retirement plans, your retirement plans, invest in it, please get over to sdirahandbook.com. Pick up my partner's book. It's amazing. I've got chapters of it in my book too. And get over to directedira.com. We have so many videos, and our podcast is there as well. Tiago says in Oceanside, are there any COVID-related write-offs for self-employed? Well, Tioga, anything you spend for in your business to make it COVID safe, that's a write-off. But you got to be looking at the PPP, the RTC. I wouldn't say there's more write-offs for COVID-related expenses, except whatever you're going to pay to make your building safe. But I think you're fine. Broke Brothers say, thanks, Mark. You bet. You guys are awesome. I'm going to jump over here. April, how would an internet-based business be taxed? An internet-based business is a sole proprietorship. Are you going to do an LLC? Are you going to do an S Corp? Guys, I'm going to try to say this just so that I help answer a lot of your questions. If you are an operational business, you are going to be taxed as a sole proprietor and pay self-employment tax. If you are an operational business and an LLC, you are going to pay self-employment tax. As soon as you start making $30,000, $40,000 or more, I want to switch you to an S Corp, and we can start creating some major tax savings. Let's just go through the list. What are ordinary businesses? We've already got questions about an internet-based business, a realtor, a marketing company, restaurant, doctor, dentist, engineer, accountant, lawyer, consultant, financial advisor. Those are all operational businesses. People, if you're selling a product or a service, you are a freaking operational business. And by default, you are a sole proprietorship first. And you're going to get taxed like crazy. But the more money you make, we can start saving taxes. But that first 40 or 50 grand, I just want to write off as much as we can. And then we're going to convert to an S Corp. Now, on the flip side, the asset side, we're talking about rental property, dividends, interest income, retirement plan strategies, royalties, gas and oil. But they're all passive. That's passive income, capital gain, appreciation. No self-employment tax over here. All right. Okay, Allie, Instagram, what do we got?
So, I own a pest control company. I own a house. What do I do to protect my personal from business?
Okay, client owns, let's just do it, pest control. Cool. Is that an operational business? What's his name?
B Mario 5.
B Mario 5 owns a pest control business. Is that long-term passive? Is it operational? Is he selling a product or service? What should he be? The LLC to begin with. If he's making more than 50 grand, well, how should he be organized? S Corp. Okay. Now, we're just getting started. That's our first tax issue. Then I want to maximize this auto deduction. Are we paying your kids? Do you have a board of directors? Are you writing off your auto, your home office, travel, electronics, computers, cell phones? Blah. Then, Brian, or is it Mario?
B Mario.
B Mario says, well, I want to protect my home. I have a home over here that's paid for. And I did Dave Ramsey's plan, and I got out of debt, and I paid off my home, which I'm cool with. But now it's a target. And I'd say, Mario, how much is your home worth? He goes, it's worth 300 grand. Now we need to think, how are we going to protect the home? I have entire podcasts on that topic. And in my book, Tax and Legal Playbook, and I'm just saying that, I'm not trying to be salesy here, but this is a whole conversation. In my Tax and Legal Playbook, Protecting Your Home from a Lawsuit, Chapter 19, I give 5 ways to do it. $19 or less on Amazon. You can get it on Kindle in the next 20 minutes. So Mario, read that chapter. That's how you protect your home. The Revocable Living Trust doesn't protect it. It creates privacy. You know what's interesting, everybody? I've done all sorts of videos and I love it. What's better? A bulletproof jacket. I'll ask you, Corey. Al, you both have to answer. A bulletproof jacket or camouflage?
Camouflage.
You go with camouflage. Corey's going with camouflage. Allie?
Bulletproof?
Bulletproof jacket.
I don't know.
Those are both right answers. But wouldn't it be cool if we could do both? If I do it right with LLCs and trusts, and when you get on a phone call with my tax attorneys, Our goal is to provide as much camouflage as we can and as much protection as we can. You want both. Isn't that interesting? Some people, you don't need both. Some people need both a lot. Get over, Mario. Read the chapter on protecting your home. Okay, I'm having so much fun, but we're probably out of time, aren't we? Okay, I'm going to... Look at Andrew's like, bulletproof, camo. You guys are awesome. Okay, Millie says, I get Social Security, welfare. I have side hustle. How do I organize it so I don't lose or jeopardize my benefits or money? If I want to add my fiance to my payroll, but he gets SSDI, how do I not jeopardize his benefits? Is this recorded? It is, isn't it? Okay, Millie, everybody listen. Millie brings up a really interesting comment. She says, me and or my fiance are getting Social Security disability benefits. You might be getting unemployment. You might be getting welfare. Once you start running a side hustle and you report that income, your benefits go down, right? Now, this is a hard conversation, Millie, because on one hand, some people, I'm just saying it, some people are going to go, quit the side hustle or only just make enough so you don't lose your welfare or live under the table and don't report it. Milk the system. Some people would say that. Others may say, freaking A, don't take advantage of the system. You make as much money as you can, get legit and get out of that problem. Get out of the welfare. Make as much money as you can and take care of yourself. Maybe the answer is somewhere in the middle. Now, if you have Social Security disability, you can easily research and find out how much money can I make before I lose my disability. Try to cap it at that. Now, here's an interesting thing. On most Social Security disability benefits, passive income, on the right side, passive income does not affect your Social Security disability. So you could go out and buy rental properties and still get your SSDI or ID payment, right? So it doesn't mean you have to give up on entrepreneurship, and it doesn't mean you can be self-sufficient. But people, I'm probably the type that says, I'd rather control my own destiny, make as much money as I can, and get off the welfare and all that Social Security stuff if possible. But it's up to you. And you've got to really think through it. And it's a really difficult question. So Millie, I'm grateful that you bring that up in a public forum. Okay, a couple other questions. Are we okay? Corey says no. You got to go? Okay. Damn it. Okay. I'm going to leave it on this. Pat says, a person who spends $15,000 to start a business but only made $600 to do it, and only made $600 in income. What's your take on this? Everybody, if you're starting a small business and you spent 15 grand and only made 600, that doesn't mean you failed. It doesn't mean it's over. Be careful putting that all in a tax return in 1 year. You might draw a little too much attention. Modify your plan. Let the business evolve. Do something else with it. Amateurize those startup costs. Spread them out over time. Pigs get fat and hogs get slaughtered. Don't give up on your dream. Business owners don't fail. Business owners get flexible. Modify your plan. What you originally visioned for your business may look something different 5 years from now. That's okay. That means you're a success in my book, not a failure. Everybody, don't give up. I'll be here next Thursday trying to answer Q&A to help you out in your small business. If you need a consult, I said it before, give the office a call. My tax attorneys are some of the most affordable in the country when you start putting a tax attorney title out there. 888-801-0010. Just keep buying the book, studying the videos on my website. I've got a lot of free information out there. I know it's tough. Don't give up. Keep studying, and we'll be there for you if you need us. Catch you next week.